All right, inflation numbers are out, and they're not that dandy at all. We're going to get right into it because we didn't beat or even meet the expectations. We missed pretty badly. So let's get into this breaking news. You can see it right at the top. S&P futures cut gains. They were up last night because April inflation rises more than expected. 10-year Treasury yield jumps back above 3% after hotter than expected inflation data. We expected inflation to come in about 8.1% in the month of April. In the month of March 2022 is 8.5%. And it came in at 8.3%. April's consumer price index, a measure of key inflation, rose 0.3% month over month. It was supposed to rise 0.1% month over month, and that's what the market was excited for. That did not happen. Economists expect the CPI to rise 0.2% from the month prior and 8.1% year over year, according to the Dow Jones estimate. This compares with March 8.5. So we did go down. It's not 8.5. It went from 8.3. It went from 8.5 to 8.3, which means it is slowing down. It's just not at the level at which we need in order for this to actually, be a meaningful decrease in inflation. Core CPI, which strips out volatile food and energy prices, saw an even bigger month-over-month jump of 0.6%. That's also really bad. So you take out food and energy, which can be volatile because there's a lot of different variables and factors that influence those prices. You talk about some of the core things like energy, that's not as volatile because how many barrels of oil you have and how much demand and supply you have. That rose 0.6% month over month. That's not good. The inflation reading is important given that this data is largely determining the Federal Reserve's direction on raising interest rates, meaning if inflation doesn't slow down, the Fed has to get more aggressive. If the Fed has to get more aggressive, 75 basis points of an increase on inflation is not out of the table. 50 points was what we did last week. Now, Jerome Powell said, hey, 75 is not off the table. If we can't curb inflation, we're going to go higher, which means if we go higher, tech stocks and growth stocks and valuations will compress even more because interest rates are not friendly to those tech stocks. Fowler said the Fed is trying to quell some of the demand that's helping drive inflation. She believes that the new slowdown in demand is already being reflected in the housing sector as new 30-year mortgage rates have skyrocketed to 5.5%. That's important because if you want to buy a house right now on a 30-year mortgage, you would be paying a 5.5% interest rate. My parents paid like a 3.25% interest rate when they bought their house December 2020. So increased interest rates should theoretically curb off demand, right? It should be telling people, hey, don't buy the house. It's too expensive. You're getting a bad deal. Wait a little bit. And as you wait, supply opens up. As supply opens up, there is a little bit less inflation. And this is in the context of housing, but this is also in the context of every other thing that exists. If people stop buying stuff and supply chains get a chance to catch up, specifically from the lockdowns going on in China, then we have a much, much better chance of actually curbing inflation. You need less demand in a world in which there's not that much supply in order for the prices of things to go down. If the prices of things keep going up, it's because there's too much demand and too little supply. That's really meaningful considering the housing market is the most cyclical part of the economy. 65% of Americans own a home, and that tells us the Fed is already doing its job. So it's that's good that that's happening. But overall inflation is not decreasing at the level we need it to decrease. This is the actual chart from BLS.gov. You can go to their website and literally click on the CPI charts. So as you can see, it is decreasing, right? So October 2021, we had in the food section, or all items, we had 0.9% increase, 0.7%, 0.6%, 0.6%, 0.8%. February went up, 1.2% in March. This was definitely due to Russia-Ukraine. This was bad. This is when the market went pop. This is when it just absolutely got destroyed. And then April came down 0.3. Now we wanted 0.1, 1.2 to 0.3 is not horrible, right? It's a good sign. It just wasn't what people expected. And as we're seeing with earnings reports, if you miss on what's expected, things don't go that well. So 8.3 was the unadjusted 12 months ending April 2022 inflation rate. As you can see a little bit lower here, let's go to gas prices. So we have gasoline all types. That it was negative in April 2022, so it got a lot worse. And some of these other things got worse as well. Now, new vehicles also went up a little bit. So as we can see, there's more demand for cars. These are the things that need to go down in order for this to really, really sort of pay off. The food index increased 0.9% in April. This was its 17th consecutive monthly increase. Food is getting more expensive. The index for food at home rose 1% after rising 1.5% the prior month, so it's rising but not as rapidly as it is before. 5 of the 6 major grocery store food groups indexes increased over the month. The index for dairy and related products rose 2.5%. It's largely monthly increase since July 2007. That's kind of crazy. The index for non-alcoholic beverages also rose sharply, increasing 2% over the month. Energy. The energy index declined 2.7% in April after rising 11% in March. That's good. The gasoline index declined in April, falling 6.1% after increasing 18.3% the prior month. Remember, March was when Russia-Ukraine happened, so that's when gas really was bad. I mean, it's not good, but it's still, it's not as bad. The other major energy component indexes increased in April. The index for natural gas rose 3.1%, and the index for electricity increased 0.7%. So inflation was not good. I mean, this data, I don't want to say that. Inflation data was good. It just wasn't great, and it didn't meet the market expectations. Now, what does this mean for the market? So we've already seen most stocks in the pre-market basically tank on this news because, in the pre-market, if you miss expectations, you're not going to survive. Let's go to our watch list right here on Webull. And as you can see, we've got a decent amount of red that's just filling up. It's kind of just what happened. I believe Palantir, let's go to this stock. I say this stock like it's no, it's the stock that I like. Down 2% on inflation news. They were trending up in the morning and then they kind of went down. Coinbase, wow. Oh, this is bad. Coinbase has got hit. So Coinbase was at $61 yesterday. Now it's down another, I think 5%, overall 23%. Yeah, it's down another 23%. Pre-market $56. Wow. 5% from yesterday. So Coinbase collectively has fallen almost 25% since yesterday. That's bad. Tesla at 782, down another 2% pre-market. It was trading at 799 yesterday after hours. So as you can see, S&P 395, low. We did not go below 398, as you can see right there at 395. The market doesn't like this news. Now, overall, it's a good trend because hopefully next month it continues to decrease, even if it's not decreasing that fast. As long as it continues to decrease, I think that's a good thing, and eventually flatlines going up until September, October, November. But if it increases again next month, that means the Fed is not handling this, right? That means interest rates have to get even crazier. So the outcomes that are left for this are either it starts to flatline and the Fed gradually raises interest rates, or it doesn't flatline, the Fed has to accelerate interest rates, or it increases and the Fed has to go and hypercharge, and potentially that might not even work because it's not curbing inflation. So we're going to see what happens. But that was the inflation report. Let me know what you guys thought. Let me know what you guys expected from this inflation report. Ultimately, not the best news, but also not the worst news, in my opinion. It just didn't decelerate to the level we thought it would accelerate at 8.1, coming in at 8.3. I will be doing the morning open today, so it's probably already done by the time you guys are watching this, but we'll also be doing reactions in real time when the market opens and see what inflation does to stocks at 9:30 a.m. Eastern. So thank you guys so much for watching. Let me know your comments on inflation and what you thought from the CPI report. I will see you in the next one.